Hello, everybody. In my last lecture series, that is on the 27th lecture series, I discussed about the money market. It was, and the money market was part three. From part one to part three, the concept of the money market instruments, what is the role of the central bank or the Reserve Bank of India in our country, how it is acting as a lending mechanism for the government as well as for the private entities, and how it can be a very good mechanism for the retail investors as well as for the qualified institutional investors, buyers or qualified institutional investors who are eligible to invest a large sum of money as in the form of a money market investments. Today it will be the 28th lecture series, and it will be part 4 and the final part and the concluding part of the money market. Then we will shift our focus to capital market. I told you during my first lecture series of part 1 of the money market, where I mentioned about that the two important components of financial market right now is money market and the capital market. So I will end by the importance of the money market in India and how the money market is being treated in India. What are the various aspects we need to know, that how in India the money market is being examined. The money market in India actually is a component of the financial instrument markets for the short-term funds with a maturity ranging from overnight to 1 year, including the financial instruments that are deemed to be the close substitute of the money. Now, similar to the developed economies of Indian money markets, it is diversified and has evolved through many stages, from the conventional platform of the treasury bills and the call money to commercial paper. Earlier, it was the treasury bills and the call money. Right now, there are many instruments which are available in the money market segment in India. That is for the commercial paper, certificate of deposits, the repos, the forward rate agreements, and the interest rate swaps. These are the various instruments which are available in the money market segment. Now, the money market Indian money market actually consists of the sub-markets, and it is very diverse and wide in nature, particularly the type of the short-term credit. The money market fulfills the borrowing and the investment requirements of the providers, and the uses of the short-term funds, and the balances the demand and the supply of the short-term funds by providing an equilibrium mechanism. So it can serve as a focal point for the central bank's intervention in the market. Now, what is the role of Reserve Bank of India in the money market? The influence of the Reserve Bank of India's power over the Indian money market is confined almost exclusively to the organized banking structure. So RBI is very much has got an important role in the money market, and it is mainly confined to our Indian banking system. Like, for example, scheduled commercial banks, like, for example, nationalized banks, the PSU banks, like, for example, the banks which are actually operating as a payment bank or a finance bank. So it is also considered to be the biggest regulator in the markets, and there are certain rates and the data which are released at regular intervals, and which have a huge impact on all the financial markets in India. Now, the unorganized sector, which consists mostly of the indigenous bankers and non-banking financial companies, although occupying a very important position in the money market, have been properly integrated with the rest of the country market. So, if we actually study that how the money market components and how it regulates the banks. For example, the structure is that key component in India is divided into organized sector like RBI, bank, and primary dealers. In unorganized sectors, I have just mentioned about, it is an indigenous bankers and the money lenders. Money lenders are also a part of the private money lenders are also a part of the structure. Now, what is the instruments? The instruments in the treasury bills and the call money notice, the commercial paper, certificate of deposits, and the repos. So the facilities and the short-term borrowing lendings supports the monetary implementation and the maintains the liquidity. And Key participants are RBI, the Government of India, the banks, the commercials, and the corporate bonds. Increased focus on the digital transactions and increased demand on the safe and short-term securities. Now, what are the instruments actually being dealt in India in the money market segment? Number one is the treasury bills, the T bills. It is called the short-term borrowing instruments of the central governments, which are available for 91 days, 182 days, and the 364 days maturities. 364 days means if you invest now, you will have a period of 364 days. Call or notice money market. Money market actually extremely short-term loans like 1 to 14 days between the banks, and certificate of deposits. It's negotiable, unsecured issuance of promissory notes issued by the banks and financial institutions. Commercial paper are as unsecured money market instrument issued in the form of a promissory note by highly rated corporate borrowers to raise the short-term funds. The Reserve Bank of India is a supreme regulator managing liquidity through the instruments like the repo and the reverse repo. This is a very important concept where we are going to learn that how the repo and reverse the repo plays in the banking sector, and the interest rate involved and the changes in the interest rate takes place through this kind of mechanism to maintain the economic stability. Sorry. And the important thing is this, that what is the reverse repo or what is a repo? So main component over here is to understand that how does the money market is the financial market sector in which the financial central bank's roles. There is the interbank lending, then money market instruments are there, treasury bills, commercial paper, certificate of deposits to facilitate the liquidity management, safety, liquidity, and the comparing the money markets mutual funds. For example, what will be the risk, what will be the liquidity, what will be the return, what will be the investment horizon, what is the diversification management. And diversification and management, mutual funds invest in various assets including the risk through diversification. Fund managers and investment decisions based on the extensive research and market analysis, and the mutual funds offer schemes catering to the various risk appetites and the investment horizon. So my conclusion is this, that the money market plays a very vital role in the financial ecosystem, that is providing the financial institution with short-term funding and liquidity management. Now, by understanding the various instruments and their functions, investors can make informed decisions. While the money market offers safety and liquidity, it is essential to consider the mutual funds for a diversified and professionally managed investments strategy. Consult with the financial advisor to tailor a portfolio that meets the financial goals. Thank you very much for watching all the series of the money market. I think that I will be able to I've tried my best in order to explain you the position of money market in India, the concept behind the money market, all the instruments catering into the money market, and the role of the Reserve Bank of India as a supreme regulator. Thank you very much for watching. We will continue our lecture series. Our next segment will start with the capital market. Thank you.